Today we're going to be talking about Warren Buffett, but more specifically, we're going to be talking about some of his strategies when it comes to investing. We're going to tell you what not to do when it comes to investing because, it is kind of easy to lose money. So ask yourself, do you fall into that category? Are you someone that does not like to lose money? If that's the case, you may want to stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, everyone? Welcome back to the channel. Welcome back to yet another video, a video that's going to make a lot of sense and wake a lot of people up. Now, before we get started, and we are going to get started right away, I ask that you do me a favor and smash that like button because it really helps out this channel. But now, without any further ado, back in the studio live, I've got Chris here with me. Chris, say what's up to the Ticker fam.
What's up, Ticker fam, Ticker family.
So today, we're going to be talking a little bit about investing, and we're going to be talking a little bit more about investing like the old school investors used to do it. Specifically, we're going to be talking about Warren Buffett, because I think that a lot of today's investors are kind of losing their way, or maybe they never had a way in the first place. So listen, I'm going to very quickly run through how Buffett selects companies. Chris is going to go into a little bit more detail about some of these things, but essentially what Buffett would look for is companies that have a sustainable competitive advantage. We might know that as a moat today, or some of you might. What Buffett would do is look for companies that can successfully fend off the competition and have a better shot of increasing intrinsic value over time. Now, Buffett, he tends to focus on long-term intrinsic value rather than short-term earnings. And what really matters in this game, Chris, is, according to Buffett, is how much cash a company is able to generate for its owners in the future. And there's always going to be some degree of uncertainty when it comes to this and when it comes to the future of cash flows, which is why, they call it projections, which is why Buffett always buys companies for less than their intrinsic value, essentially. But I think that the problem with today's investor, Chris, is that they're looking for instant gratification. What do you think about that?
I think it's just all a part of this new microwave culture. Everyone's looking for a shortcut. And I got to tell you, when I found out you were doing Buffett, I had to come over midweek. I think I'm more excited than you are about it.
Really? Tell us more.
This is my guy. I am a student of his. I have been one for 20 years. I've read all of his works and works done about him. So I most can relate to his method and his approach to investing.
With that being said, I am glad you are here because we're going to want to hear from you about this. We know that you are a fundamental guy. We know that you take investing very seriously. And wait. We got to tell the top ticker trades, the ticker fam, exactly how serious you take investing. I want you to tell them a little bit about your new rank on tip ranks.
I think everybody knows by now I moved up in the top 5 percentile out of 345,000 investors or portfolio managers.
And that does sound really amazing, but how long did it take you to do that? Like a year, 2 years?
2 weeks in.
2
weeks in. I told them on my page that, and I spoke with you off the record. I said, Pat, I think I can compete with anybody out here. I'm going to go and put my portfolio public. It's actually public on Tip Ranks. And I want to see how I stack up with the big dogs. So I done it. And I was kind of amazed. I was like, man, these guys are good. They do this for a living. And I got right in there and moved immediately up to the top of the pack. So I plan to stay there.
And look, I got to be honest, not that I didn't believe in you because obviously I had a lot of faith in you. But when you hear things like that all the time, people tell you things like that all the time, that they're able to do things that other people aren't able to do, and you kind of you tend to shrug that off when you hear things like that. But man, you really got right into it, got your hands dirty, and took over, man. I'm shocked. I'm impressed. I really, I don't even know what to say.
It was surprising to me as well, but long term, I never had any doubt. I know what I bring to the table. I know I really fundamentally understand this. I respect technical analysts. They have all the fun, in my opinion, but it's nothing better than getting into the financial statements, getting into the accounting, the management of the firm, the strategy of the firm, the direction, and getting your hands dirty and digging through and, getting fundamentally comfortable with a firm the way Buffett teaches it.
I do agree with you, but there's one more thing I got to say. I'm going to backtrack a little bit because I just thought of something that really, impresses me a lot more. So what's today's date, Chris?
I believe it's April the 5th.
April the 5th. So as we all know, over the last few weeks, we've had a few rough weeks in the stock market. A lot of people have been experiencing kind of a rough time, and we see that even in the views on YouTube videos when it comes to videos related to the stock market. So what I want to say, and I'm bragging on Chris here because I am so impressed, this advancement that he's been able to accomplish on tip ranks. This happened during a time when everybody else was failing in the stock market. He worked his way up to, what's your rank now?
45,000 out of 375,000.
Very impressive. 45,000 out of 370-something thousand. He did this during one of the roughest times that we've experienced in the market here lately. So, Chris, I got to say I'm very proud of you. I really am. But I'm gonna quit bragging on you here, and we're gonna go ahead and move on.
I thank you. We were talking about Buffett and his strategy and his approach and how it contrasts with today's generation of investors.
Today's investors. Can we call them investors, Chris? I mean, are we being a little?
I believe
modest?
they would call themselves investor, but the market is more accessible now. A lot of more people are involved in taking an active management role. Back in the day, you just kind of took your money to an advisor, but we have smartphones now and computers and apps, and everybody can get in there. So it's really important that everybody kind of understand what's at stake, what goes into buying these companies, because you're not buying a stock, a piece of paper. You are buying a piece of ownership. So it's important that you understand how they function.
So they're buying essentially a piece of the company.
They are part owners, yes.
So they need to take this seriously. They don't need to just look for short-term opportunities, I guess.
Right. They should act like an owner, and an active owner is involved and concerned about the direction and the performance of the company.
Sorry if I interrupted you. So essentially we're saying that they need to take more responsibility, correct?
Right. As far as awareness go, in my opinion, we can take Neo, for example, and you know how in depth I am with Neo. I understand what is going on. I mean, you would think I was at some of these board meetings because I am involved. I am concerned. I'm part owner. So,
right.
It's not very many things you own in your private life that you don't really keep an eye on or care about.
That actually does make a lot of sense, and hopefully some of Ticker fam here, if they're listening, this opens their eyes up a little bit. I guess let's get our hands dirty a little bit. What should we start with here? Talking about Buffett.
Well, his style's been around, Pat, 100 years almost now, so it's nothing new under the sun. It's just people don't like to get in there. They want to sit in front of a computer and be told what to buy, and they don't really want to think for themselves. So what I like to do on my channel is to empower the viewers and my subscribers. And I like to think of it like, you can't tell someone that's subscribed to my channel, you can't tell them anything. Or you can't blow, them away with, all of this unbased, unfounded claims. Because if you follow my channel, what you learn to do is to think for yourself. I put tools out there so you can make better informed decisions, because I see so many YouTubers reading articles to people. And no one wants to break a stock down. No one wants to get in there and show you a model, show you what their assumptions are, their projections and forecasts. They want to read a newspaper article to you and get 1 million subscribers. You know, no one wants to work, and I love the work. So that's kind of the way I look at it.
And you're teaching these people how to fish here, Chris. You're not just giving them the fish. You're teaching them how to fish.
Right. I mean, and I understand that it's not for everybody, but it may be that one person looking to say, hey, I'm tired of having a chauffeur. I want to learn how to drive myself. And those are the kind of people I really relate to. And they want to kind of take the wheel. And, you know, with education comes question. And once you start to learn more and become more comfortable with the securities you own, you will start questioning more. And, you know, some of this stuff will start to be more important to you, where, you know, you start holding management accountable. And when they don't perform, then you leave the company. You sell your stake in the company and you move on. A lot of people say, oh, they had a rough quarter, I'm out. But you don't know why that quarter was rough. You don't know what the market conditions were because you haven't talked to your management team, so to speak. So I just think it's eye-opening. I talked on my portfolio show this weekend where I had some securities that didn't perform well, and I was able to go in and look and see and check on the management. You know, hey, what's going on, guys? And I still believe they had some upside. 2 of them didn't, and those guys will be replaced soon. But 3 or 4 of them I was concerned about. I did a physical on them. And I found out, you know, I'll keep these guys around. They just had a rough week, but they'll get up, dust themselves off. So it's just kind of looking at them and questioning it for yourself and not being susceptible to what anybody tell you. Well, he speaks a lot about intrinsic value, and it sounds like a broken record, but the intrinsic value is what it's really worth. It is what a company is really worth when you turn all the noise off, all the news, and get off all these message boards, and it's you and the financial statements. That is the intrinsic value. It's not the Wall Street Journal, not the Reddit rooms, not YouTube. When it's just you and that 10K, that's when you find the intrinsic value. And you got to know a little bit of math to get there, but you can get there by yourself. You don't have to go by anybody's word. I'm going to do. I've been hearing a lot about what you had going on with microvision. You know, I don't want to get into it now, but I said, you know, I hear a lot of this stuff. I read it too. I said, you know, what I'm going to do is go pull all their financials and put it and build a model and find their intrinsic value. What is this all about? I've been hearing a lot of stuff, and while Neo's kind of slow, I'm going to put that together and come back Sunday, and hopefully I'll have it ready and we can present something. But it's just stuff like that. I don't want to go by what's all out in the news. I've read those comments, and oh my God, what are you up to? 400 comments on that show now?
Oh, way over than 400. I mean, a lot of them are just dumb with people trying to throw insults my way, and there's literally only a handful of comments there that actually, where people actually took the time to try to explain their position and argue their position, and then defend their position when I come back with my comment. And I do appreciate those people, but I think that there's too many followers out there today, Chris. Too many followers. And that's kind of, it kind of relates to what we're talking about here with Warren Buffett in a way. I guess I better stop myself because I don't want to be hating on anybody. But, I think everybody who gets what I'm saying is that a lot of these newer investors, they expect, instant gratification. They're not doing their own due diligence. They're kind of following the crowd, but they're not, like you said, paying attention, reading all of the 10Ks, just really digging in and doing everything for themselves. They're depending on somebody else's due diligence or somebody else's research. They're depending on somebody else to tell them exactly what to do.
Exactly. So you're out there in no man's land, and I made a reference this weekend on a video. I says, you're driving and the GPS has gone out, and you're out there on your own. If you buy a stock and you don't know what the intrinsic value is, you don't know where it's supposed to go. You're hoping it goes up. You're wishing it goes up. But late at night, when it's just you and your thoughts, you really don't know where this stock is supposed to be or how much upside it has or what's detrimental to its cash flows. And the thing Buffett tries to teach you is to remove your emotions out of it. This is a business. This is a cash flow machine. Money goes in, input goes in, they split profits out, period. If you're not making money or profits, you are not a cash flow machine. You are a hobby, an expensive hobby at that. And too many people get too tied emotionally to these stocks and start to look beyond the X's and O's. This is very simple. Once you get a profitable company, you project their cash flows based on economic growth rates. And once you have them projected out 5, 10 years or whenever you expect them to stop growing and grow at a normal economic growth level, similar to the economy, you discount them back to find the intrinsic value. And when I say discount them back, you have to discount the cash flows back in year. And I've done this with NEO. And if you look at some of those models I have on my videos, you will see the discount rate I'm using to discount them back. You have to go and determine and calculate the cost of capital, the cost of debt, the weighted average cost of capital, how much the equity is costing the firm, what their tax rates are, what their goodwill and amortizations and just an assortment of items on the balance sheets and income statements. Then that way you intrinsically know what this company is worth. If you are unable to do that, you are in no man's land. I suggest you get somebody and follow them that have a model and not a newspaper article, because they're reading you something. They don't know where it is. I mean, you go through some of these comments and these YouTubers ask questions of these guys and they ignore them or say they're too busy. And it's like, I doubt very seriously you even know the answer to this question. But they will follow these guys to the edge of the earth, and it is just, once been said, is no more of a docile creature than the American stockholder. And that's true today.
Can you go into that just a little bit more and explain that to us?
Well, the U.S. capital market, trillions of dollars in this, and no one is holding these people accountable. No one is saying, hey, you're going to have these covenants, or this is going to happen, or that is going to happen. We have this certain company that we're going to look at, to not be named, have just been blowing millions of dollars of shareholders' money year after year after year, and they continue to get more and more, and no one's asking this management team, show me the receipts. What are you doing? Why are you still getting paid? Why are you paying bonuses? You don't even have a product. So it's just all about holding them accountable, making sure they're doing, what they're getting paid to do. And it's hard to hold them accountable if you don't even know what they're doing in the first place.
Exactly. I couldn't agree with you more there. I'm also not going to mention the name of this company. I think too many people are just kind of letting management slide by, and people just aren't asking the questions that they need to ask. They're kind of just allowing these companies to continue on doing what they've been doing. And yet we're allowing this to go on because we're the ones that are supporting these companies. It's the shareholders that are supporting these companies by buying the stocks. And
right.
I know we did speak off record. There was something that you mentioned. The house money phenomenon.
Right. It is the more money they make, or they'll have a large gain, and they cover a position. Let's say you had a position, you have it covered, you have $3,000 in more excess. You fall into a gambler's fallacy house money paradigm where you get even more riskier and lax with that $3,000 because you feel like it's house money. But it's not. It's your money. You risk your capital to gain it, and you should make decisions as if it was your money. But a lot of these companies have a big gain to, quote, shut up the shareholders. And I did a video with Neo on why I didn't think they'll make it to 100, why I think they should not even try to make it to 100, because I just feel like you're already burning through too much cash. You're successful. I love the company. I love the business model. I'm invested in them. But you already in China, you got the biggest market right there in your backyard. You got the government on a string. Why do you need Europe and Norway and Germany? I've seen pictures of Neos in California now with California tax. You need to get profitable there. I mean, you're going to Hong Kong. This is like the 5th or 6th share dilution that we got to go through. And I'm like, what is the rush? And I'm surprised that, Edison Yo and Nick Leah and some of these guys aren't holding their feet to the fire and say, Bentley, what is going on with all this rapid growth? I mean, slow down. You wanted to build a plant. You scrapped that. You had fired 3,000 employees because money got low. You're selling Tesla proprietary equipment because money got low. And now you get back on your feet with a new offering and you're about ready to expand all over the world without becoming profitable in your home country. Pump your brakes. I can't obviously get in front of them at a shareholders meeting, but you do expect Deutsche Bank, Bank of America, Merrill Lynch, some of these guys to raise these questions. But we've read so many press releases and so many earnings calls where you have the investors. I challenge you and some of these listeners, go read an earnings call and read how happy the investors are to be in the presence of the company when they work for you.
Yeah.
Like Nikola and Edison, they own together, their respective firms own, 10 million shares of NEO, and you would know it by the way they acted in some of these meetings.
Exactly. It's everything's kind of backwards here.
Right. So, but it's that microwave culture, and I don't want to, get anyone out of what they're comfortable with. But, my thing is educate yourself, arm yourself, questions. Just don't go for anything. Don't let them throw you a earning surprise to silence you for another year. That's my position, and that's kind of what Buffett teaches. And always buy them at a discount. And it's hard to understand where that discount is if you can't intrinsically value a company. So, and I have some tools on my page and maybe do some workshops in the future and kind of teach these guys this so they could, be empowered more. I mean, I would have a YouTube page. I want to have pride in it to say, hey, I have the smartest subscribers on YouTube. They are least likely to fall in the trap. Buffett didn't get the .com exposure. He didn't get the housing exposure. He didn't get the tech. I mean, he doesn't get into this. It's a reason. Like, you don't get lucky and miss every major catastrophe by luck. He understands what he's doing. If it does not make dollars, it does not make sense. And so many people are investing in companies that don't make dollars.
So there wasn't a situation where he didn't know what he was doing when it came to that company, because he always understood how that company worked, because he only invested in companies that he understood. So would that be good advice, do you think, Chris, for some of these people getting into investing today?
Right. If you don't understand how they make money, why would you lend them your money? I got a lot of heat back in the day when Facebook was going public. And they was like, Chris, what do you think about this stock? What do you think this? And I'm like, I'm not touching it because I don't know how they make money. And you remember when Facebook went public, I don't believe they had, generated any profits at the time.
Mm-hmm.
And I said, I don't understand their business model. I think they can be successful. I think they'll be just fine. It's just personally, I don't know how they make money. I'm not going to lend them my money. If you've ever got a loan, think about this. You ever gone to the bank and got a home loan, car loan, student loan? One of the first things they ask you is, how do you make money?
Yeah.
What is your credit score? But the American shareholder just throws money at them. They don't know how they make money. If they make money. It's crazy. If you don't really understand the company, just kind of be cautious. And another thing Buffett believes in is he only invests in companies a fool can run, because one day a fool will. And he has hundreds of quotes like that throughout his books and stuff. So,
anything else you want to share with us about Buffett or?
Not off the top of my head. I think they can go and let that digest. We'll be spending a lot of time this weekend talking about a company to be named.
Yes,
I'm gonna bring my model over. Were we gonna go live with it or take questions, or you don't want to go on the record and commit?
You know what? I don't mind going live with that. I guess I should kind of maybe announce it and see how much interest there would be in those particular investors going live. But
could be like a Q&A where we could just have a civilized conversation.
It's going to be a hate session. I'm pretty sure it's going to be a hate session, and people are going to be hating on us. But, we stand out from the crowd. We're that 1%, that goes against the crowd, against the grain, and does, what we need to do.
Just think about how good they'll feel after they unload All of that stress on us.
Maybe they're going to be nicer in my comments section. I don't know. I mean, I would certainly appreciate that. It would make me sleep better at night.
Yeah, we were going to have a show where we addressed 50 to 100 of those at a time. I don't know. We're just going to have a lot of fun with that. Yeah. I'm giving away the show. Let me get off of here. I'll let you close this out before we give too much of our future plans together. It's going to be a lot of fun this coming week.
Chris just kind of gave away a lot of that, and I know you guys are super excited. I know I am. I know we both are, actually. Look, this is going to be a blast. Even, well, you don't know who this company is, and we're not going to tell you right now, but even without knowing who or what this company is, what they even do, because I'm not even sure if we know. That was just a joke. Listen, this is going to be a lot of fun. This is going to be a high conflict session here. But we're still going to keep it professional, but it's going to be very interesting. So I urge you to keep an eye out for it, I guess.
Even if they don't participate, you want to go get some popcorn and just sit back and listen to the show.
It's going to be like a drama series.
No holds barred.
Yeah. I mean, it's going to be entertaining, to put it in a nice way. So you guys aren't going to want to miss that. Be sure to smash that like button before you guys leave, or I'm afraid Chris might not ever want to come back. He checks the likes. He doesn't say anything, but he checks those likes. And if there's not enough of them, he gets pretty ticked off here. We don't want to make him mad. So guys, make sure you smash that like button. You can find a link to Chris's channel in the description below. Make sure you guys go check him out, because if you don't, you're missing out. Sub to his channel, because this man will help you make money. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.